What's happening, guys? Another Sunday scan coming at you. This time it's going to be super short because we've got a gala tonight, which is done in the town over from me that we put on each and every single year, and it's getting down to the wire. So I've got to get going, figure out who's going to sit where, figure out what I'm going to talk about, and that's that. So obviously the market came in, which is awesome. It's finally giving that big pullback. The bubble started to kind of burst, and we've been talking about being relatively low in innings for quite some time. And I also said when I was talking about the innings that they're going to remain low because, in my opinion, it's all about the opportunity. For some people that only know how to go long, then yeah, the innings are probably pretty high, but the number of opportunities that we had last week on the short side, fading the EV market, fading all these different types of names, it was just unbelievable. It's relatively low in innings for the potential, the opportunity, and in my opinion, just like I've said every other time, we've got another 2 years at least of this intense liquidity and opportunity. Whether or not things start to dry up after that, who knows? But for me, it's all about opportunity and, most important, liquidity. So we had a lot of that. We had a lot of fantastic opportunities. And one thing that I would definitely think about, especially if you're new to trading, especially on the risk management side that we talk a lot about. You just saw this week how fast things can come in, and when you don't really think that they can, and then they do, you probably are left confused. And AMC almost down 50% within the last 10 days or something like that. So you think it's starting to fade, it can't really go down, and all of a sudden it's 50% lower. DOCU down 50% one day, and it's just the air that's coming out of these trades. DraftKings, you think that it can't go much lower, and then it continues. It's well over 50% down at this point from just maybe like a month ago. Penn and Peloton, all these different names that were very retail loved are just completely coming apart. And whether or not valuations will ever matter, at least they're no longer as ridiculous. And look, like I've said all along, if you were the type of person that was like, these don't make sense, they shouldn't be this high, the valuation's too high, the market cap's too high, like all those types of maybe correct opinions, that doesn't mean that you were making money. That doesn't mean that you were trading well if you were too perma biased in any one direction. So there was a point where we had talked about that I even was maybe underperforming compared to the opportunity out there because I was too reserved based on some of these moves and like, how can this be? And you just have to have an imagination, and that's what it comes down to. And you just valuations still don't matter. At some point they will. Everything's still overvalued. I mean, anybody could debate both sides, but we just got to go day by day and opportunity by opportunity. And the good part about being versatile, long and short, is weeks like last week are absolutely awesome. The key is going to be not to fight trends. The key is going to be to join trends. 9:45, 10 a.m. plus is typically when I look for more of the patience trade. Before that is reactive trade off open and things like that, versus taking a trade at 9:32 a.m. and trying to force whatever thesis that I may have. There's also going to be a lot of times where maybe you're right, but it's going to take 2 or 3 times. So you might want to have 2 or 3 little band-aid, little cuts before you end up nailing the big trade. But you don't want to force your bias and then take that ability to nail a big trade away. And that's what a lot of people do in this market is, this thing's faded too much, I'm going to try to catch the bottom. Oh my gosh, it's still going down. I'm going to add, and then you just blow out in an emotional state of panic, and then the trade comes. So it's super important to be patient. I think we did a fantastic job of waiting for things to happen this week, and let's see how this week goes. So I think more beneficial than scan this week, and although I do have some watches, but I think more beneficial in this type of market is you just got to see what's going on. What earnings were there? What's the market doing? Are we up 500, down 500? Because that's really going to dictate what happens on any particular day. You're not going to be looking for these breakouts on a day that the market's down, 800 points. You're not going to be looking for bounce plays on a day that the market's down, 500, 600, 800 points. But if we've got that reversal, you should have, a dozen names that you're ready to go on. And then when that happens, whatever ones have the best risk to reward type of setup, those are the ones that you probably want to, go to. There's a lot of times that I have stuff on watch, but then there's no liquidity. And if there's no liquidity, I don't want to trade it because my risk is up. If I outsize the position, then it's not really just participating in the move. I want to just participate. I don't want to be the move. I don't want to have that extra risk because I'm oversized based on the volume or the liquidity. So I think that is it. And before I forget, Brent V, you've got the t-shirt for this week. We'll give away a bunch more next week. All right, guys, so real quick, as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational, informational purposes only. You guys know the drill. This is just kind of how I prepare. Goal is to share, what I think makes a good trade and a good trade opportunity. Hopefully you guys can learn from that. VIX is going to be one of those where it's not really worth making a game plan. It's worth understanding what it is. You guys should know that it's an ETF, not a stock. You should know what causes it to go up, go down. A lot of people think that it's inverse of SPY, and I get it because when the SPY goes down, a lot of times this goes up. That's because volatility is higher. VIX is based off of volatility, UVXY, and all the other instruments or products based off of volatility. All do the same thing. All are going to go in the same direction. Sometimes you might get a faster decay or unwind on something that like UVXY that has 1.5x instead of just a non-leveraged ETF. So understand what it is, why, and I think that the important levels to kind of keep an eye on are up towards this level over here. And if we gap down, that'll be an area that I'm kind of interested in. If we don't gap down on the markets and we are rebounding a little bit, then obviously this is going to gap down and we might have that nice unwind. So don't underestimate how far this can unwind. Don't underestimate how far it can go if the market stays in a state of not so much panic, but just this unknown. So very clean trade last week into the end of the day. There's a couple of trades that I made early on. One was really good. Second one, I was up 50 cents per share. I ended up stopping out for a relatively flat. And then into the end of the day, the goal was for that 1 to 2 pullback. That's what I was focused on. That was my goal, and maybe a fade back to the VWAP, and that's exactly where it went. So it was a nice way to close the week out, and hopefully we have more of this opportunity. For me, I know that typically the first couple days I absolutely crush it on these, and then I get used to being aggressive and being right on it. And I know that in history I've usually end up giving some back because I'm trying to continue to make that same trade. So it's important for me to make sure that that trade opportunity is there and I'm not forcing something that isn't there. Next two is LC, ID, Lucid, and F. Pretty much the same thing. I've been trading those two with XPEV. You had NEO and LI. And a bunch of other different names. Obviously, Tesla's coming back as well. Look, EV sector took a break, and it's unwinding. I still have the same thoughts on F, that it might crash under 18s and do that kind of flush and come back before it wants to go higher. We've faded a lot on a lot of these names, so just keep that in mind. We've maybe get away with kind of scaling in quickly and the bottom falls out the last couple days. But don't forget how far we've faded. So what I want to see the next couple of days is this morning rebound and then pressure. And until we have some type of reversal either on the market or some type of flush out in the EV space in a more of a panic manner, not the slow pressure, I don't think we're going to have any notable bounce until then. So those are going to stay on kind of permanent watch for me. F has just been a fantastic trader. And then last but not least, CFBI should look pretty familiar with, some of these traps that we've seen where you've got this high volume day and it just kind of fades off all day. And you guys saw the trade on CFBI from the short side the first day that they mentioned the deal. And then it continued to go almost all the way back to 10, which I was wrong on that. Like maybe I want to say it was a year ago or so, I had a conversation about, SPAC and understanding, you can get you could redeem it. And my understanding or takeaway, wrongly so, was that, you had to be part of that original deal and not necessarily that you could just pick it out of the open market. And then during the merger vote, you had that opportunity to pull out. I thought that was only reserved for the people that were part of the original deal, which I was wrong on, and I learned something new on Friday. So it's not a investment strategy that I do. It's not something that I typically hold into any merger votes or anything like that. That's not my style. That's not what I do. I just take advantage of the momentum and the technical trades that are setting up, the overextensions, as you've seen time and time again on these types of setups. So, failed follow through. LABD, I want to just stay familiar with it. Liquidity is kind of but the day that they bounce, this thing will come in really, really nicely. I want to stay familiar with it. Being on failed follow through does not mean that I think it's a short. It just means I want to be familiar with it for when it does start to break down. MTTR has been fantastic. I was there 36, 35, 34s, anticipating that fade. And I don't think I made it past like 31 or 32. Complete unwind. I've nibbled at it the last couple of days, here and there, and maybe got a piece. But killer unwind. So I'm actually still watching for potential splash back down towards the 20s. So I'd love to see some rebound and then pressure come back and then maybe spill off back under or at least towards 20. Same thing, GOEV. Got a lot of the same action here. This one, I think that's pretty retail crowded. I actually think that you could see it come back down towards the 9s and into the 8s, both of which, or this one, I think GGPI, yeah, both of which have been, they were stellar moves. They were really setting up again, which leads me to believe that there was a lot of retail longs anticipating that next breakout, and then all of a sudden it just falls apart. Next up, continuation side of things, CPIX. This is one of those liquidity trap setups. That does not mean that it's going to go, but it fits. It's got the check marks, like it fits. We've got the 300 million or 200 million volume day. It's gone down to about 10% of that. The next day it's even lower. And now we're in that T+2 sort of area for any shorts that kind of overstayed. So if you just look left and look at the key levels, I kind of put them on scan, but I think it's most important that you start to see this 480 level kind of break and then this 530 level. Those are the two levels that I would start to gain a lot of confidence. And if it started to base over 530, 550s, then game on. I think we could have a crazy move. Nothing I want to chase. Could absolutely just fail come Monday. I want to be proven right. Just like LGVN, just like all these other trades that trap shorts and they set up PTPI, you name it, you want to be proven right. And if you are anticipating it and trying to be right, a lot of times, they don't work. It's the outlier trades that we're looking for. And the only way that you find the outlier trades are, knowing what setup to look for. And only 1 out of maybe 10 or 1 out of, 100 end up doing that. So my point there is that if you're anticipating it and expecting that it has to happen, more often than not, you're going to be wrong. CYAD, same thing I said in the room on Friday. I'm thinking more of a Monday trade. It just was kind of tight and it didn't have too much range. It should have died a bunch of times. You can see the wicks over here. They kept on getting bought up. I actually think that this could have a continuation. I think that if it bases 450, 460, 470s, we've got that breakout towards 550s. It's all possible. If we gap up and we have trouble again in the fives, then you can see looking left why. But if we start to base over this chart resistance, given this volume, then we have a potential for that secondary move. And then ABUS, honestly, I really thought that this was going to have a little bit more power. It had so much exchange at 6, and it was just a big intraday squeeze. It came back nicely the last couple days. It's been offering good trades, but I was just thinking there would be more, and it just hasn't happened yet. But it's still the volume and the way that it's been trading does interest me. It feels like there's an underlying buyer there. But again, it's not something where I just want to add and expect that it has to. I want to be proven right. And the way that I would be proven right, or at least I want it to prove to me, is if it starts to kind of break out over these 430s, 440 levels and form a new base. Until then, it's just an idea. You don't want to anticipate it with any size or anything like that. Otherwise, you'll end up in a bad spot. I've got a lot of staying familiar ones, so those that go to the description on YouTube, you can click the link and see the rest of the scan. But just ones to stay familiar with: DocU, TKNG, DraftKings, 50 to almost 20, like high 20s right now. Neo, XPEV we talked a little bit about. BCTX is another one where blew out all the shorts and then trapped longs. TQQQ is always a good one to kind of know. Bitcoin, we had a huge crash this weekend. So you've got Mara, you've got Riot, you've got Can. All of that is good just to see the chart. Because when the trade comes, you're going to remember from yesterday, from today, from whatever, what the chart looks like. So you're going to be able to react that much quicker. And that's, I would say, one of the strongest assets for me is just knowing what charts look like already without even seeing them. Because I'm just always constantly flipping through charts and just seeing where sectors are at any given time. So anyway, that's it. Like I said, short and sweet scan tonight. We've got the gala tonight. We'll see everybody in the room tomorrow. If you have any questions, as always, reach out. And I hope you guys have a good rest of the weekend.